This is Scott Becker with the Becker Private Equity and Business Podcast. Today's discussion is the markets rise on a lower inflation reading. Here's what's happening. There's a specific index that the Fed watches, which is the Personal Consumption Expenditure Price Index, which is sort of a derivative of the CPI. This rose at its slowest rate in a couple years this past month at 3.8%. So the markets rise because it gives people a sense that the Fed might be getting closer to their terminal rate hike spot. They're at about 5 to 525 basis points right now. People think they'll get to 575 or so, but the reading on inflation just a little bit lower gives people comfort that might be getting closer to the end of Fed rate hikes. We know we're still going to have a couple more. Another piece that the Fed watches very closely is something called the core price, the core index, which is a smaller derivative of the CPI and the Personal Consumption Expenditure Index. That still rose 4.6% in May, slightly down from April, but still elevated at 4.6%. That takes out food and housing from the CPI, so still pretty high. But in any event, the lower inflation reading, the movement in the right direction, is what's giving the markets comfort today that the Fed is getting closer to their terminal rate spot. Thank you for listening to the Becker Private Equity and Business Podcast. It's again June 30th, 2023. Let's hope for a great second half of the year. Send me your podcast suggestions, 773-766-5322. Thank you so much for listening, and thank you to Jeremy Core and the team at Executive Podcast Solutions.